So here is the crude oil chart, and now we are going back somewhere. Let's start here. And now we, like last time, we talked about how much money you should risk. As far as I know, most people use between 1 to 3%, sometimes 5, sometimes 10, but in general, the idea is the smaller risk that you use. Let's say you use 1%, you risk 1% of your portfolio, of your budget, whatever. Well, we could argue and say the bigger the stop loss can be, which means if we were to take a trade, let's see if we can find something here. Well, so here is kind of a, we could argue that here is somewhere a support line, which means now the market here is falling down, and we will now set a buying opportunity somewhere around here. And so now the risk reward ratio is 2.5, but let's say we target the previous highs. The risk reward would be 2.3. Now if we have a budget of 1000, we can only, if we risk 1%, we can risk 10 euros, which means if we make it simple and take a 2.0 risk reward ratio, here exactly. Now you can see the stop loss is pretty big. I mean, since the support line is here and we could put a stop loss here, then we would have a bigger risk reward ratio, but at the same time not as much of space when it comes to our stop loss. So if we are risking 1%, 10 euros, we would here have a margin of about $3 when we are looking at the crude oil market. And if you're looking at this range 2016 April until, well, July, we've traded between 40, let's say 42.50 to kind of 51.50, which is roughly $9. And here we have a $3 stop loss room, which is a third of the whole market movement. Now, of course, it depends where we enter. I mean, we could argue that we would or should wait and maybe enter the target here, which means we have now a risk reward of 2.5, which means we could even go lower with it now again. So now we would almost have well, roughly, not exactly, but almost $4. I mean, depends what we are targeting again. But we would roughly have a $3 space for our stop loss, which is, like I said, the 1/3 of the whole movement. And now if we add again $3 or $4 times should equal 10 euros, which means of course our win would still be 20 if we are only risking 10. And as you can see, this could take some time, but now if we go further, well, here our stop loss was quite not that bad. I mean, if we go to the support line and enter our trade here, we likely still would have lost, but the thing is we lost only 10 euros here, and we could have entered the next trade again at this level, And if we would have won here with a 2-point risk reward ratio, which means we would have lost 10 euros and won 20 euros back, which means we still would have made a win. Now, of course, if you're looking at the chart, this trade was from 20th July until almost 20th of August. So basically, that would mean we would have to wait 1 month for a profit of $10. Now, of course, this is not the maybe best trading strategy, or this is not what most people want. But keep in mind that this strategy also works on smaller time frames. I just wanted you to make clear that the reason why we risk so little, or 1%, 2%, is because you always have a 50-50 chance, which means if you lose, you don't want to lose like 100 out of $1,000, like 10%. Especially like here, the trade was really close, which means our stop loss was just slightly triggered. And the thing is, if you risk less money, then you can make your stop loss way bigger. For example, here, if we went for a risk reward ratio of 1.5, our stop loss wouldn't have been triggered, which means the smaller amount you risk, the bigger your stop loss can be. And of course, if you are going down to smaller time frames, I don't know, let's say 5-minute chart, and of course it depends how volatile the market is. I mean, we can go, what is this now, 5-minute chart was, why does it look so weird here, even when I zoom in, I don't know, maybe, what is going on? Okay. For example, here's the 1 hour chart. Now we can use the same strategy. If we go back a little bit and maybe look for an entry. So here we are retesting this. Let's say we can retest maybe this area here. So we enter our trade here somewhere, and again we want a risk reward of well, we can say 2, which is what most people do, most traders. You can go for 1.5, 1, it doesn't really matter, but 1 to 2 is just the simple strategy. Also, if you're talking about that the chances are always 50-50, even if you have no idea what trading is, you still have a 50-50 chance. Like I always say, the stock market can either go up or down. So if you're buying, you have a 50-50 chance that it goes up or down. If you're shorting, the same thing. So even if you lose one and win one, you still have a profit with a 1 to 2 risk reward ratio. And then the next simple strategy is risking little money, which means your stop loss can be bigger. So this would be and look something like this. Now if we take a look at the trade, we can see we slightly entered a trade. We can argue about that, but it doesn't matter. But you see that, and we took a profit like 8 o'clock until 14 o'clock, like 6 hours later. Now the last trade was like 1 month for a €10 profit or $10 profit. Now we made the same in 6 hours, and it was our first win. And like I said, we had $1,000 to begin with, and we only risked 10 and we made 20 in 6 hours. Now, of course, we can argue it's still not enough, because 6 hours times 4 in a day, but that would mean we have $80 in 1 day. A month has roughly 20 trading days, which means 80 times 20 is $1,600. I mean, let's say we lose half of it, we would still be at 1,200. Since we're only losing $10, not 20. But even if we would lose 20, we would still have 800 per month. This is why even with a small account with $1,000 and risking only €10, $10 per month, you can make a couple of hundreds per month easily with the simplest strategy. But most people don't know this or don't want to trade like that. I don't know. And this is why you risk a little bit of money so you can make a bigger space for your stop loss. And you don't have to worry like if you lose €10, €10 or $10 is $10. It's not that much. But you learn how to trade and you can take much more trades. And because to buy 10 barrels of crude oil, I don't know how much, depending on your brokers, but it's maybe $50-$60, I don't know. So you still have almost 900 left for other trades. And so this is just one trade that you can make if we are calculating it times a month, that you would save a couple of $100. And now you could use 6-7 other stock markets or stocks or indices, whatever you're trading, forex markets, which means you could end up with a couple of thousand with a simple strategy as this. But I don't know why people either they don't know it or they don't want to believe it, or I don't know. And you also don't have to sit the whole time in front of the screen, because here, for example, this is a hourly trading strategy. And of course, we can use this on a smaller time frame, 5-minute chart as well. We go back sometime. Damn it. So let's say we enter. Damn it. Nothing new here. Nothing new going on. Okay, here. This is the 5-minute chart. We enter our trade here with a risk reward of what is it, 2 point. So let's go maybe a little bit smaller here. And you see our stop loss is lower than the previous 3 pullbacks, which means we still have plenty of room left. We can target a little bit higher, it doesn't really matter. And you see, if we had again risked €10 and we would have made $20 within, well, depends where our trade would have triggered, within 2 hours. $20 within 2 hours, multiplied it times a day is 24 hours, so we would have 12 chances, which means 20 times 12 is 240 in a day. Now multiply it times 20, like I said, a trading month has roughly 20 days. You would have made 4,800. Of course, you have to sleep and do other things, so you can't take every trade. But this is just about, like I said, you have $1,000, and you need about 100 to trade. Let's say the crude oil market like this, because you need like maybe $50-$60 to buy a small amount of it to make $10. And at the same time you need some money for a stop loss. So you could, in the meantime, also trade some other markets, which means with a simple strategy such as this, you can make a couple of hundreds easily, maybe even a couple of $1,000 just with $1,000 with such a simple strategy. But people either don't know about it or don't want to talk about it. I don't know. But anyway, just remember that the stop loss should be a little bit bigger than, I don't know what other people do with the stop loss, how big they are or not. Because also depends how volatile it is. If you look at Dogecoin, for example, since I know this is a market that everybody's talking about, but if we see here, if you're looking at the markets, like this is back in January 2020. So we had the market was roughly at 0.001, then it jumped to 0.005 quite easily. So it also depends how volatile your market is, because look at this, we're jumping from 5 cents to 70 cents within a month, and look at this how quickly we fell back. So look at this, in just one day we went from 47 to 22, 21, 20 cents. So you also have looked at the volatility of the market to check your stop loss. So this was the video of today, since my battery is kind of low. Thanks for watching.